10 powerful assets that will make you rich. How wealthy people make money work for them. Channel introduction. Hey everyone, welcome back to the channel. This channel is built around one core idea: long-term wealth creation. And here is something we deeply believe in. Your health is your very first and most important form of wealth. So alongside smart money strategies, we also talk about living a healthy, fulfilling life, because real wealth means thriving in every area, not just your bank account. Video opening. All right guys, let me ask you something really straight up. How many of you have most of your savings sitting in a regular savings account right now? If you raised your hand, I totally get it. It feels safe, it feels responsible, and honestly, for a long time that is what most of us were taught to do. Save your money, keep it in the bank, and everything will be fine. But here is the hard truth that the financial system never wants you to figure out. Your money is not sitting safely in that account doing nothing. The bank is taking your money, lending it out to corporations and real estate developers, and making massive profits off of it. And what do they pay you in return? Maybe 2 to 4% interest if you are lucky. And on top of that, there is an invisible thief quietly stealing from you every single year. It is called inflation. Right now, inflation in the US is running at levels that easily outpace what your savings account pays you. Think about this. The dollar you put in the bank today will buy less in 5 years than it buys today. That grocery run that costs you $200 right now, in a decade, the same cart could cost you $350 or more. So while you think you are playing it safe, you are actually falling behind every single year. But here's where it gets exciting. What if instead of letting your money quietly lose value in a savings account, you put it to work in assets that grow over time, generate income while you sleep, and actually beat inflation? That is exactly what wealthy people do. They do not just work for money, they put their money to work for them. Every dollar they own is like an employee on their payroll, going out and bringing back more dollars. That mindset shift right there is the biggest difference between people who stay in the middle class their whole lives and people who build real, lasting wealth. Today I am going to walk you through 10 powerful assets that can completely transform your financial future. If you implement even 2 or 3 of these, your life 5 years from now will look completely different from where you are today. Numbers 8 and 10 on this list are my personal favorites, especially in today's digital economy, because they require the least amount of money to get started and can grow incredibly fast. So stick with me all the way to the end, because every single point matters. But before we jump in, let us quickly nail down one foundational financial concept that changes everything once you understand it. The difference between an asset and a liability. An asset is anything that puts money into your pocket, whether you are working or not. A liability is anything that takes money out of your pocket on a regular basis. Here is the thing that trips most middle-class Americans up. They confuse liabilities for assets all the time. Let us make it real. Say you take out a personal loan at 18% interest to buy a brand new car or to take a luxury vacation to show off on social media. That loan might be $70,000. At 18% over 10 years, your monthly payment is well over $1,000. By the time you finish paying it off, you will have paid the bank nearly double what you originally borrowed. And here is the key question. Is that car or that vacation putting any money into your pocket? No, it is draining money out of your pocket every single month. That is a liability, not an asset. Wealthy people build assets first. Then they use the income from those assets to enjoy the good things in life. Middle class and working class people buy liabilities first, get trapped in payment cycles, and spend decades working just to keep up with the bills. Okay, now you are ready. Let us break down all 10 assets. Chapter 1. Real estate, the original wealth builder. Real estate is one of the oldest, most time-tested, and most reliable assets in human history. And the logic behind it is beautifully simple. The world's population keeps growing every single year, but the total amount of land on this planet stays exactly the same. You cannot build more land at a factory. Supply is permanently fixed, and demand keeps rising. That combination is a recipe for consistent value appreciation over time. When you own real estate in a good location, you benefit in 2 powerful ways. First, the property itself gains value over time, which is called capital appreciation. Second, you can rent it out and collect a reliable monthly check without lifting a finger once the tenant is in place. And here's a bonus that most people do not think about. Inflation actually helps real estate investors. As the cost of living rises, so does property value, and so does rental income. So real estate naturally protects your wealth against the very force that destroys your savings account. Now I know what a lot of you are thinking right now. This all sounds great, but I cannot afford to buy a house or a rental property in today's market. I hear you. Home prices in America are at record highs in many cities, and a traditional rental property can feel completely out of reach. But here is the great news. You do not need to buy an entire building to invest in real estate anymore. REITs, which stands for Real Estate Investment Trusts, allow everyday Americans to invest in large commercial properties, apartment complexes, shopping centers, hospitals, and office buildings with as little as $10 to $50 through platforms like Fundrise, Arrived, or even through a standard brokerage account. You get a share of the rental income, and your investment grows as the properties appreciate. Real estate is now accessible to everyone, not just the ultra-wealthy. Chapter 2. High-income skills, the asset that lives inside you. This might be the most underrated asset on this entire list, and it is also the one with the highest potential return on investment you will ever find. Think about how much money Americans spend on college degrees. The average student loan debt in the U.S. is now over $30,000, and for many people it is over $100,000. And what does that degree often get you? A starting salary that barely covers the loan payments. High-income skills flip that equation completely. A high-income skill is any specialized ability that the market is willing to pay top dollar for, because not everyone has it. We are not talking about basic tasks that anyone can do. We are talking about skills that solve real, expensive problems for businesses and individuals. Right now, in 2024 and beyond, some of the most in-demand and highest-paying skills include video editing at a professional cinematic level, coding and software development, digital marketing and paid advertising, copywriting, AI prompt engineering and automation, UX and UI design, and data analysis. If you master any one of these skills, a global recession cannot make you unemployable. Companies will always pay for people who can solve high-value problems. Here is an example that hits close to home for a lot of Americans. Think about the kid who drops $50,000 on a marketing degree but cannot find a job. Then think about the person who spent 3 to 6 months learning Google and Meta ads on YouTube and Udemy, and now runs ad campaigns for small businesses from their apartment, charging $3,000 to $5,000 per client per month. Same age, very different financial outcome. The best part about a skill, nobody can tax it away from you. No government can seize it. No market crash can wipe it out. It goes wherever you go. Your skill set is the one asset that is always with you, always growing, and always generating opportunity. Chapter 3. Gold and Precious Metals, the crisis-proof store of value. Gold is not just a shiny piece of jewelry. It has been the ultimate store of real wealth for thousands of years, from ancient Egypt to modern-day central banks. And there's a very good reason for that. When economies get shaky, when the stock market crashes, when geopolitical tensions rise, investors around the world instinctively move their money into gold. This happened during the 2008 financial crisis, during the COVID crash in 2020, and during every major period of economic uncertainty throughout history. Why? Because paper currency can be printed endlessly, and that printing dilutes its value. But gold cannot be manufactured. Its supply grows very slowly, which is why its value holds up over time when everything else is falling. Now here is the mistake that a lot of Americans make with gold. They buy gold jewelry, thinking it is an investment. But when you buy jewelry, a significant portion of what you pay goes toward craftsmanship, design, and retail markup. When you try to sell that jewelry later, you get far less than you paid because those markups disappear. That is not an investment. That is an expense wearing the costume of an investment. If you want to use gold as a real asset, the smarter move is to buy it in investment-grade forms. In America, your best options include gold ETFs like GLD or IU, which you can buy through any brokerage account for the price of a single share. You can also buy physical gold coins or bars from reputable dealers like the US Mint or APMEX. Or you can buy gold through a gold IRA if you want tax advantages. These options give you pure exposure to gold's price without paying for someone to shape it into a necklace. Chapter 4. Stocks and Shares. Owning a piece of American business. Here's a question that might reframe how you think about investing. What if you could own a tiny piece of Apple, Amazon, Microsoft, or Tesla? What if every time one of those companies sells a product, you get a small slice of that profit? That is exactly what buying stocks does. When you purchase shares of a company, you become a part owner of that business. As the company grows, develops new products, expands into new markets, and earns more profit, the value of your shares grows right along with it. Many companies also pay dividends, which are regular cash payments made directly to shareholders out of the company's profits. So you are earning in two ways simultaneously. The stock price goes up, and you receive cash income. Warren Buffett, widely considered the greatest investor who ever lived, said something that should be tattooed on every American's brain. He said, "If you do not find a way to make money while you sleep, you will work until you die." Stocks are one of the most accessible ways to make money while you sleep. Yes, the stock market goes up and down in the short term. You have seen that. Every few years, there is a correction or even a crash that makes the headlines and terrifies people. But look at the long-term chart of the S&P 500. It goes up consistently over decades. The people who get hurt in the stock market are the ones who panic sell during downturns. The people who build wealth are the ones who stay invested in solid companies and let time do the heavy lifting. Chapter 5. Your own business. Working for your dream instead of someone else's. Think about your current job for a moment. Every day you show up, you give your time, your energy, your creativity, and your expertise. And in exchange, you receive a paycheck. That is a fair trade, but it is also the most limiting arrangement you can be in financially. Because no matter how hard you work, there's a ceiling on what you can earn, and all the real upside goes to the person or company that owns the business. When you build your own business, that equation reverses. Your effort builds your own empire, not someone else's. The upside is unlimited, and over time, a well-built business becomes a machine that generates cash even when you are not actively working in it. Starting a business in America today has never been more accessible. You do not need to spend hundreds of thousands of dollars opening a brick-and-mortar store. Some of the fastest-growing businesses right now are digital marketing agencies, consulting practices, content creation businesses, local service businesses like landscaping, cleaning, or home repair, online coaching, and food businesses like ghost kitchens that operate purely through delivery apps. The real power of a business as an asset is this. Once your systems are set up, your team is in place, and your customer acquisition is working consistently, the business generates revenue with or without your constant presence. That is passive income at the highest level, and that is when a business truly becomes an asset. Chapter 6. Mutual funds and index funds. Wealth building on autopilot. A lot of Americans want to invest in the stock market, but they are genuinely nervous about picking individual stocks. What if you choose the wrong company? What if the timing is bad? Those are real concerns, and mutual funds and index funds were literally designed to solve that problem. When you invest in a mutual fund or an index fund, your money is pooled together with thousands of other investors and a professional fund manager. Or in the case of index funds, an automated algorithm spreads that money across dozens or hundreds of different companies. This diversification is the key. If one company in the fund struggles, the other companies carry it. Your risk is dramatically reduced compared to picking individual stocks. In America, index funds like the ones that track the S&P 500, offered by Vanguard, Fidelity, or Schwab, are some of the most popular investment vehicles for exactly this reason. Warren Buffett himself has said multiple times that for most Americans, a low-cost S&P 500 index fund is the smartest investment they can make. The strategy is simple. Invest a fixed amount every single month through a process called dollar-cost averaging, which is the American equivalent of what is called SIP investing in other countries. You invest the same amount regardless of whether the market is up or down. Over 10 to 20 years, the power of compounding takes over. Albert Einstein called compounding the eighth wonder of the world, and he was right. A few $100 invested consistently every month can grow into hundreds of thousands of dollars over a couple of decades, without you having to make a single major financial decision along the way. Chapter 7. Bonds, the seatbelt of your investment portfolio. Smart investors never put all their money into high-growth, high-risk assets. They build portfolios with balance because they know that markets crash, and they want to be protected when they do. Bonds are a critical part of that balance. When you buy a bond, you are essentially lending money to the U.S. government, a state or city government, or a large corporation for a fixed period of time. In exchange, they promise to pay you a fixed interest rate, usually higher than what a savings account pays, and return your original investment at the end of the term. U.S. Treasury bonds are backed by the full faith and credit of the federal government, making them one of the safest investments in the world. Corporate bonds offer slightly higher interest rates in exchange for slightly more risk. Municipal bonds, issued by state and local governments, often come with tax advantages, which makes them particularly attractive to higher-income investors. Think about it this way. If stocks are the gas pedal of your financial vehicle, accelerating your wealth during good economic times, then bonds are the brakes and the airbags. They do not generate the highest returns, but they protect you from catastrophic loss during market downturns. Protecting the wealth you have built is just as important as building more of it. Chapter 8. Digital assets. My personal favorite for the modern era. Alright, this is one of my two favorite assets on this list, and I think it is the single biggest wealth creation opportunity that most regular Americans are completely sleeping on right now. Digital assets are things you create once online that continue generating income for months, years, or even decades after the initial effort. The internet gives your creation infinite reach and infinite shelf life. Let me break down exactly what I mean. An ebook you write today can sell on Amazon Kindle for the next 10 years without you doing anything additional. An online course you create and host on Teachable, Udemy, or Kajabi can generate student enrollments and revenue every single month, long after you have moved on to your next project. A software tool or app you build can generate subscription revenue 24 hours a day from users all over the world. A YouTube channel can earn through AdSense, brand sponsorships, affiliate commissions, and digital product sales. And the videos you upload today will keep attracting views and generating revenue for years into the future. And here is something that removes the biggest fear most people have. You do not have to show your face on camera to build a successful YouTube channel. Faceless YouTube channels, built around topics like personal finance, true crime, educational content, history, and news commentary, are some of the fastest growing channels on the platform right now. You can use AI voice technology, high-quality visuals, and great scripting to create compelling content without ever appearing on screen. Think about what that means. You upload one well-researched, high-quality video today. Someone in California watches it tomorrow. Someone in Florida finds it 6 months from now. Someone in Texas discovers it through a search in 2 years. That single video is a piece of digital real estate on the internet, working as your 24-hour, 7-day-a-week automated income machine. No inventory, no employees, no lease payments, and no alarm clock. Just a smartphone, an internet connection, and the determination to keep going. Chapter 9. Startup Investing and Venture Capital. The high-risk, high-reward game. This one is a more advanced move, and it comes with a very clear warning label, but the potential upside is unlike anything else on this list. Startup investing means putting money into an early-stage company that has a big idea but needs capital to make it real. Think about what it would have meant to invest in Google, Amazon, or Uber when they were just tiny startups with a handful of employees. People who did that turned relatively small amounts of money into life-changing fortunes. Early investors in companies like these saw returns that were not 10% or 20%. They were 1,000%, 5,000%, or more. Today, platforms like Republic, WealthBuilding, and AngelList allow everyday Americans to invest in startups for as little as $100 to $500. This is a relatively recent development thanks to changes in securities regulations, and it puts startup investing within reach for people who are not millionaires. But here's the part where I have to be completely straight with you. Startup investing is extremely high risk. Statistics consistently show that the vast majority of startups, somewhere between 80 and 90%, fail within the first 3 to 5 years. Most of the money invested in them goes to zero. This is not a place for money you cannot afford to lose. Only invest money here that, if it completely disappeared, would not affect your daily life, your rent, your groceries, or your sleep. Think of it as buying a lottery ticket with genuinely good odds, but still a lottery ticket. If you do want to get into startup investing, diversify across multiple startups rather than going all in on one. Do thorough research on the founding team and the problem they are solving, and be patient. The payoff, if it comes, often takes 5 to 10 years. Chapter 10. E-commerce store. Your 24/7 global shop. My second personal favorite. The internet has permanently rewritten the rules of retail in America and around the world. 20 years ago, opening a store meant finding a physical location, signing a lease, spending tens of thousands on inventory and interior design, hiring staff, and showing up every day to run the operation. The barrier to entry was enormous. Today, you can launch a fully functional online store in an afternoon from your kitchen table with almost zero upfront cost. And that store can sell to customers in all 50 states and in countries you have never even visited. Here are some of the most powerful e-commerce models available to Americans right now. With dropshipping, you list products in your online store, but you never actually hold any inventory. When a customer buys, the supplier ships directly to them, and you keep the margin. With print on demand, you design custom products like t-shirts, mugs, phone cases, and art prints. And a company like Printful or Printify manufactures and ships each item only when an order comes in. You never touch the product. With digital products, you create and sell things like templates, presets, planners, spreadsheets, or design assets. The customer downloads them instantly, and you have zero fulfillment costs. Platforms like Etsy, Shopify, Gumroad, and Amazon Handmade make all of these models incredibly accessible. But the most powerful thing about an e-commerce store, and the reason it earns a spot in my personal top 2, is this. A physical store in America closes at 9 or 10 at night, but your e-commerce store is open 24 hours a day, 365 days a year. You can be at your kid's soccer game on a Saturday afternoon, and your phone is buzzing with order notifications. You can be asleep at 2 in the morning, and your store is processing sales on the other side of the world. Money is coming in while you live your life. That is what financial freedom actually looks and feels like. Important note before you go. The right way to use this knowledge. Now, before you run off and try to do all 10 of these simultaneously, I need to share one of the most important pieces of advice I can give you. Knowing about these 10 assets does not mean you should empty your savings account tomorrow and scatter money across all of them at once. That is not a strategy. That is a panic move, and it will not end well. Building real, lasting wealth is a marathon, not a sprint. Here is the sequence that actually works. Start by investing in your knowledge and your skills. Read books, take courses, develop a high-income skill that gives you the ability to earn more. As your income grows, your investing power grows. Then, before you invest a single extra dollar anywhere, build an emergency fund. This should be 3 to 6 months worth of living expenses, sitting in a high-yield savings account, untouched. Why? Because if you lose your job, or face a medical emergency, or any other financial curveball, you do not want to be forced to liquidate your investments at the worst possible time. Your emergency fund is what keeps you in the game when life gets hard. Once that foundation is solid, start building your asset portfolio slowly, intentionally, and based on your own research. You do not need to do everything at once. Pick 1 or 2 assets that resonate with your current situation, your interests, and your risk tolerance, and go deep on those first. Here is the ultimate choice you are facing. You can keep chasing a paycheck your whole life, working for someone else, watching your savings lose value to inflation, and handing your best years to a system that was designed to enrich other people. Or you can shift your mindset, start thinking like an investor, and build a system where your money works just as hard as you do. The decision, as always, is yours. Summary. The central message of everything we covered today is this. The difference between people who struggle financially and people who build real wealth is not income. It is mindset and asset allocation. Most Americans keep their money in savings accounts where inflation quietly destroys its purchasing power, while banks profit massively off of it. Wealthy people, by contrast, deploy their money into assets that grow over time and generate passive income, whether that is real estate and REITs, high-income skills, gold, stocks, their own business, mutual funds and index funds, bonds, digital assets like YouTube channels and online courses, startup investments, or e-commerce stores. The path to financial freedom is not about getting rich overnight. It is about consistently building and acquiring assets that put money in your pocket while you live your life. Start with knowledge, build an emergency fund, and then build your assets one by one. Do that with patience and discipline, and 5 years from now, your financial life will be unrecognizable compared to today. End credits and sign off. Alright guys, that is everything for today's video. We covered a lot of ground, and I genuinely hope this opened your eyes to what is possible when you start thinking about money differently. Here is what I want you to do right now. Go down to the comments below and tell me, which of these 10 assets are you most excited to start building first? I read every single comment, and I love hearing where you all are on your financial journey. If this video brought you value, please hit that like button. It takes 2 seconds, and it helps this channel reach more people who need this information. And if you are not subscribed yet, go ahead and hit that subscribe button right now, and make sure you tap the notification bell so you never miss a new video. Remember, your health is your first wealth, your knowledge is your foundation, and your assets are your freedom. I will see you in the next one. Thank you so much for watching.